What's going on, guys? We have data right now. Unemployment claims as well as PPI.
Welcome back to Squawk Box. Rick Santelli here live at CME HQ with February Producer Price Index, the wholesale version of inflation. On the headline, expecting up 0.3, up 0, goose egg, unched. Boy, that is progress. We haven't had a number that low. Well, we equaled it in July of last year when we had another 0. To find a lower number, you're back to October of 23 at minus 0.4. Strip out the all-important food and energy. Down 1/10. Down 1/10. That's 0.4 lower than expectations. Down 1/10 also equals July of last year. Find a lower number, you're going back to COVID times, April of 2020. Now, let's take the ex-food, energy, and trade. That comes in at up 0.2. That's a 10th light to expectations. Up 0.2. How does that fit in? Well, that would actually be the lowest since it was up 1/10 in November of last year. All right, let's take a step back into macro. Year over year on the headline, 3.2. That's a 10th cooler than expected. 0.3 less than 3.5 in the rearview mirror. And 3.2 would be the smallest month over month since 2.9 in November of last year. Ex-food and energy year over year comes in at 3.4. 3.4, that's 1/10 lighter than expectations, 0.2 lighter than the rearview mirror. 3.4 equals where we were in November of last year. To find a lower number, you're in September of 24. And finally, the sixth part of this PPI complex comes in at ex-food, ex-energy, ex-trade. That comes in at 3.3. 3.3, that would be 1/10 lighter than expectations, 1/10 lighter than the 3.4 in the rearview mirror. And to find a lower number, you go to 3.2 in April of last year. To summarize, the market has gone down a bit in yields, but it's kind of right back where it was with respect to a 10-year at 432. That's up 1 basis point. And probably the reason is the progress on these numbers. But as I pointed out, we've kind of been there, done that with these numbers last year. So we are making progress with respect to going from the end of last year to the beginning of this year. But we're not really making progress on the big picture. But certainly inflation isn't getting worse. No doubt this is a bit cooler than expected, and it's definitely cooler than our last look at PPI. Now, let's go to initial claims. 220,000. That's down 2,000 from a slightly revised 222. And maybe the most important area to concentrate on initial claims isn't the fact that we're still very low. The fact is that we haven't been over 250 since October 4th, the week of October 4th of last year. That is pretty interesting when you think about it. And finally, continuing claims, 1.9 million was hit the second week of this year, but we're back down again, 1,870,000. Yields haven't moved much. CPI, of course, I think yesterday didn't move much because global yields have moved higher. Boons are touching 290 today. And if you look at the spread between our yields and Boon yields, it's the tightest it's been in 20 months. That's something to pay very close attention to. 22 billion, 30 years reopened, will be auctioned at 1 Eastern. Becky, back to you.
All right. Excellent job, as always, Rick. Thank you. Let's get over to Steve Leisman. He joins us right now with more on this as well. Steve, you've been digging through the numbers a little bit. What else jumps out at you?
Yeah, just a little bit. Look, here's the deal. We have this tension that's going to happen, but isn't happening now. I think the first thing you want to say to yourself is you're going into a period of time when there could be some price increases relative to tariffs. It's always better and much better to be coming into a situation here where inflation is lower. These are good numbers, basically driven in one part by trade services. It's not necessarily a good thing for investors to hear because margins, it's a measure in the wholesale numbers of people who are selling things, the middle folks out there, the middlemen, we're down by 1%. That's one aspect. Final demand for goods, though, was up 0.3%. That was perhaps driven by chickens and eggs and those sorts of wonderful things. But overall, it's a good report. It shows that inflation coming into this uncertain period is under control. control. I'm not seeing a big pop in jobless claims of federal workers. I just had that number. It was up just a bit. It's not a big deal right now, and I didn't see a big pop in D.C., Virginia, and Maryland when I scanned it very quickly. It has been creeping up in that area. Those layoffs may be yet to come because when you get the severance, you don't necessarily have the ability to file for jobless claims right away. That's something that can come down the road. Interesting this morning, we don't often talk about Bank of Canada. They cut their interest rates by a quarter point, but a couple warnings out there. They talked about how are they going to deal with this idea? Tariffs could drive up prices, but also drive down growth. Let me see if I have that quote here from the Bank of Canada. What they said, quote, was, monetary policy cannot offset the impact of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. Why bring this up? Why talk about the Bank of Canada? Because the Federal Reserve may face a similar dilemma down the road. They're telling you in the Bank of Canada they're going to watch and be more mindful of inflation. They also said while economic growth is coming stronger than expected, the pervasive uncertainty created by continuously changing U.S. tariff threats is restraining consumer spending intentions and businesses' plans to hire and invest. That's a much bigger, trade is a much bigger part of their economy over there than it is here. But we're also hearing and seeing things like that. Alcoa was talking, guys, by the way, and they said they've seen two reactions to the higher aluminum prices. Some folks have bought ahead of time. Other folks have...
All right, so data just came out, PPI. Obviously, PPI is not as important as CPI, but in a nice trend. As I was saying yesterday, that if you look at the Trueflation data, which... Man, this site crashes often. Okay, you can see here the Trueflation data coming out saying that the true inflation rate is actually 1.37. So inflation is not the issue here, right? And rates haven't cared about the inflation case in a while. Rates were pricing in the possibility of a slowdown. Rates are not pricing in the possibility of inflation. Now, unfortunately, what's going to happen is on March 19th, when the Fed is set to make a decision, they're going to say that we cannot cut yet because we don't know what the inflation implications are of the Trump tariffs. That's what they're going to say. And they're going to use that likely as an excuse to hold off cutting. And then they will revisit the cuts in May, right? Their next meeting in May. But right now, if we take a look at what are the odds that the Fed cuts, and this has been on point, ever since the pandemic. It hasn't been wrong once, actually, when it has overwhelming bets on one side. But you can see here that for March 19th, 97% chance that the Fed doesn't cut. But if you look at May, it has gone from 50-50 now actually to about 71-28. And that's because of the inflation data coming in better than expected, but not significantly better. PPI was significantly better, right? The more important side of this coin is that the jobs data, if you look at initial jobless claims today, and then we'll take a look at the charts. But if you look at it, jobless claims today, you can see that 220K unemployment claims versus expected 226. So we are now seeing a back-to-back wave of positive unemployment data, meaning that there's less unemployment by some measures than the market expects. Obviously, the unemployment rate a couple weeks ago did come in was it last week actually? Unemployment rate last week came in at 4.1% versus 4%. But if you start taking a look at some of the other metrics, it looks like unemployment is not skyrocketing just yet. So when unemployment skyrockets, that is when the Fed is going to panic. But I think that the Trump administration and the Treasury are now looking at the 10-year yield being like, man, we wish that wasn't the case, because when we have good data, that is not going to do well for our plan to lower yields. I still think the 10-year can form a head and shoulders like this. I drew this maybe a week or two ago. But I think that the 10-year can form a head and shoulders and drop. But for sure, the 10-year going back up is not something that the administration wants. Obviously, their goal is to try to bring the 10-year down, especially when they have to refinance the government debt, and they're going to be doing it at a higher rate. So, good data, the behavior that enforces is that the market becomes more risk on, meaning if you expect the data to be good, why would you invest in bonds if bonds, offer a minimal gain versus something risky like stocks? And that's why you see when bonds go up, stocks go down and vice versa, right? So in my opinion, I don't think, until the White House changes its tune, I don't think that, unfortunately, the attack on yields is going to stop here. So there's that. In terms of the market, appreciate it for Jane Dots. Appreciate it. Thank you, Ryan. Appreciate it. So from a market standpoint, like I said, this has been a very surprising drop to me. Not that I didn't think we would drop. Obviously, I thought in February that we might suffer a correction. And we hit correction territory. But like I said before in my previous recorded video from a couple days ago, the surprising thing to me wasn't the drop, but it was the fact that we didn't see any relief rallies along the way. Because even in 2018, even in 2022, we did see violent bounces. So we haven't seen that. And right now, if you look at the SPY or the SPX, doesn't matter which one, but if you look at the SPY or the SPX, you can see that, we did suffer a correction, which is, 10% drop, but we're sitting at the 300-day moving average. So, at some point in the very short term, stocks price in all the bad headlines that are out there, right? And we tend to see relief rallies. And I'm hoping to see a bigger relief rally just to give us more of an opportunity to potentially short. But that also doesn't betray the fact that a lot of stocks that we want to own are at beautiful valuations. Whether this is the bottom or not, I don't think anybody knows 100%, obviously, because so much is in the hands of the Treasury and the White House. So, like I said, you still have a responsibility to look out for your investments in your portfolio. And if the market is offering you something that it hasn't in years, at least 5 years, these valuations on Google, Amazon, Tesla haven't been this low in a very long time. So it is providing us with some great buying opportunities, but unfortunately, until the White House changes its tune, I don't particularly think that this is the bottom. But I am hoping for a nice bounce. Hopefully the market can muster that up. If we look at ES, I think ES, which is the S&P 500, needs to take out these equal lows here at about 55.34.50. That is what I'm eyeing today. Whether it takes it out first and then gives us a counter move. You guys know that we traded the moves pretty well yesterday. What we look for is where is the manipulation after the data, and then you want to typically trade counter to that manipulation, right? But I would not be surprised if ES takes out those equal lows. Now, what I hope happens is that we take out those equal lows first, which would then set up an optimal long on the indices. Not necessarily a must. There is a potential long from here. There is a potential long from here. To take out the pre-market highs. Let me look at something real quick. Because we have 8:30 open right there, and we have midnight right there. take a look at NQ real quick. We don't yet have divergence, which I really like to trade with, but I want to see if I can take a long from here on NQ. Actually, I'm going to wait to see if that 830 low can get taken out first. That data low right here. Yeah, I'm going to wait to see if that 830 can get taken out first. If we took if we had taken the data low, to me, this is a long here. But you can see that that right there is the 830 low. Otherwise, I favor a long here, but I canceled my long because I think I want to see us take out the 830 low, at least one of the indices, at least NQ or ES. If the other one doesn't do it, it's perfectly fine. We'll have divergence, but I want to see at least one of them take out that 830 low, which is the PPI unemployment low. But this otherwise would be an optimal long. Don't make me long this here. Oh, ES did take out the low. Okay, ES took out the low and NQ didn't. Let's see if we get a reversal here. ES took out that low, the 830 low. NQ not quite yet. Which did give us a little divergence there on the low time frame, but this is a low, very, very tight stop limit here, so I'm okay taking this trade. Up 450, 460. I'm going to see if I could take it to the data high. Up 600, guys. Up 800, moving stop to break even here. Beautiful. We are in a macro. I would like to see a push here. Take it if it's good for you. Up 850. Up 1,000, guys. Practically zero drawdown on this trade. Hell yeah. Let's go. You trading shares or options, bro? You can't trade options pre-market, and it's neither. This is futures. Close it if it's good for you. I want an additional 60 points here. Fuck yeah, guys. $1,200. Let's go. All right, I'm going to book 1,200 here. I'm going to book 1,200 here before market open. Bang, bang. Let's fucking go. We copied that trade across many account. The reason that you see different amounts here is because on some of my accounts, I took it with twice the number of contracts. So in the copier, you can set a ratio for different accounts with different amounts. Oh, that rhymes. Nice and early. So we got a nice reaction off 8:30 and midnight. I think that this continues up, but we do have the drawn liquidity below. Wanted to scalp that nice. I think this can still go, by the way. I think this can still go to data high. Let me see. What is ES doing? Do we have SMT? No, I think this still goes to data high. We still have 13 minutes left for this macro. A little bit of some weak price action here. But I think it still goes up to data high. Yes, I'll explain it in a second. I'll explain this in a second. Beautiful. If you closed it, I don't begrudge you here. I want to see if we could take this to data high. Here's my Thinkorswim account. So I took it in prop, which is the trade that I showed you. Kept it open in my real money account. I want to see if we can get to data high real quick. I think one of them gets to data high and the other doesn't. Just like we saw one of them get to data low and the other didn't. I'm going to take one off there. I have one left. I'm going to set an alert on ES. When ES takes data high, that if it does it before NQ, then I'll be out. My finger on the trigger. Already took one contract off, have one left. We took 50% of this wick. I think we get there, obviously, but I think we suffer a drawdown until then. Is it worth an extra 20 points for me? 20 points is $400. Yeah, I'll explain the trade in a bit and right after I'm out of it, okay? I just have one contract left, so I want to manage it properly. But I'll excuse me, guys. Leave a thumbs up, guys. There's 1,200 of you here, and I just made some of you a boatload of money, and there's only 190 likes. Let other people find the stream so that they don't have to go watch Meet Kevin or somebody. If you guys want me to give you more trades, leave a thumbs up. Think about it. You'll be doing it for charity too. The more people that watch, the more they can donate to St. Jude's. Okay. If ES takes data high, I'm out of NQ. NQ showing a little interim, but a little bit more weakness here. Still in the macro, 5 minutes left. Beautiful push here. All right. 850 on that last contract. I'm out. So booked a total of... How much are we up on this? Let me see if I can pull this up. Okay, a total of 1,500 on the live Thinkorswim account. And then on prop, It was a mix between 800 and 1400 across the accounts. Easy. I heard a knock. Nah, bro. The Airbnb we're staying in, the ice machine sounds like a fucking bakery, dude. It's so loud. It sounds like a mechanic shop. It's a nice place, but yeah. At first, I did think it was like the FBI or somebody knocking at the door, but then, I've been here for a week, so I'm used to it. Do you have a schedule of when you trade live? Yes. The schedule is called every fucking day, but not on YouTube. I only come on YouTube during high impact news like FOMC, CPI, PPI, and then obviously I make the recorded videos. But in terms of my trades, I trade live like this every day on the Discord. Man, that was a fire ass trade, 0 drawdown. But if you want to trade live with me every day, sign up, bro. Sign up down below. Most people fucking waste their money on bullshit streaming services. Disney Plus, Hulu, Netflix. When you add it all up, you're probably much better off watching me trade every day at market open. At least you make money from that. There's no free trial, dude. Once in a blue moon, we will do that. Right now, there isn't. So you don't need a free trial. If you are serious and you want to join. If not, also your prerogative, and I'm happy either way. There. You can sign up there. I'll explain the trade right now. Let me just get some more coffee. Fire, man. Market didn't even open, and we already had a $1,500 trade. Anonymous, no, you can trade on Treasury. You can also use a prop account, which is why I have this up here. You can get 80% off Apex accounts if you don't want to trade with your own money. So the way that prop accounts work, you sign up for an account, that gives you 80% off. So it's a crazy discount. It's usually like 100 something. That will give it to you at like 30. You pass the evaluation, right? So say you get a 50K account. You have to trade it to 53K. Once you get to 53K, they give you a funded account, meaning now after you pass the evaluation, any money that you make, you get to withdraw within every prop firm has different rules, right? But within certain rules, but you basically are trading with money that you can withdraw in a funded account. So no, you don't need 15K per contract to trade futures. And if you want to trade a cash account, you can go with Treasury. The margins for Treasury intraday are $500 per ES contract or $1,000 per NQ contract. It's the smallest intraday margins on the market for a real money account. So there's no excuse if you want to trade futures. In my opinion, day trading futures is much better than day trading options because it's way more precise. Also, it's 23 hours a day. Right now, I would not be able to take any of these trades with SPY or QQQ because the market is not open. But futures are some of the most liquid products on the market, and they're very precise. The only options you have is to buy or sell, meaning to long or short. With options, you have all the Greeks, theta, vega, right? You have IV, delta, etc. If the stock doesn't move, your option still loses value. There is no preciseness in terms of how much you make or lose if the stock moves a certain amount, right? It's kind of just a rough guess. Whereas with futures, it's a lot more like stocks where you buy it exactly at a certain price, you exit at exactly a certain price, you know exactly how much your profit is, how much your stop limit is. It's exact every single time. So in my opinion, if you're going to day trade, you're much better off day trading futures like I show you when I'm live here. right? I don't mind swing trading options. I think there is a time and place for options. They are amazing. But for day trading, I think options are ass, honestly. So if you want to do it a cheap route, go with a funded account. So get an Apex account connected to Tradeovate and start practicing. And if you pass the evaluation, then you get a funded account. What a nice exit. What a fire exit. The market is not even open. I'm going to get some, you can swing trade futures. Yeah. Yeah. It's just, for most people, the intraday margins are cheap, right? So on Tradeovate, it's $500 for ES, $1,000 for NQ. But if you hold it overnight, then you're beholden to the CME overnight margins, which bumps up to, I think, like 15,000 or 14,000 for ES and 20,000 per contract for NQ. So it's a big difference with swing trading futures. You do have to have a lot of money to swing trade futures. You don't need to, by the way. So you do get a tax advantage, though, in the U.S., 60-40 tax advantage. Let me get some more coffee, and then I'll explain the trade to you guys. Give me 1 second, okay? Don't leave. We're going to trade some more. 1 second. All right. So here's an explanation of the trade. Time levels, super important, right? The times that I pay attention to: 8:30 open, midnight open, and 9:30 open, which obviously we don't have because it's 9:12, right? When you have data days, typically on the data candle. So let's focus on this real quick, right? Where's our data candle? It's this one. So this is the 1 minute chart. This is the data candle, right? This is the data high. This is the data low. What happens on data days is usually the highs and lows get taken out. They're targeted as liquidity. So here we have a confluence of liquidity. We have the data low. We have 8:30, which is this line. Midnight is actually right above it, midnight open. You can use an indicator to draw out the time levels. It's a lot easier as opposed to you going in and doing it. I still advocate when you're still starting out to go out and draw midnight open, 8:30 open, 9:30 open, because it gets you in the habit of touching and feeling the chart. That sounded real intimate, but there is this thing called ICT kill zones and pivots by a user called TFO. And you will have to adjust the settings a little bit. You could take a screenshot of this right now if you want to copy my time levels. So take a screenshot right now to copy this. Where is it? Hold on. Sorry, this right here. So take a screenshot, copy these. You can see my 9:30, 8:30, and midnight. You're going to have to adjust your settings a little bit to this. All right. So then when the market opened, we put in that data high, and I noticed that we had 8:30, midnight, and a 5-minute fair value gap and data low. Now, because I've been around the markets for a long time, I know it's very typical behavior for one index to take a certain liquidity area and another one not to. When this happens at the low, this is called bullish divergence. So It's very slight in this case, but you guys heard me say I'm waiting for at least one index to take the low. ES took the data low. So that right there is the 830 candle. We took the data low on ES. NQ did not take the data low. Wow. So glad I got out of that trade before the data high. I've seen the fuckery too many times. So you can see there is the data low on NQ. NQ did not take it. So this right here is called bullish divergence, when one makes a higher low and the other makes a lower low. Zooming out to the 5 minute, we tapped at 830 open, did not take the data low, but I monitored ES. I saw that it took it. And that's when I ended up longing NQ with 0 drawdown, right? I longed it. You guys saw it on stream. You can rewind it, but I longed it from right there. And I was riding it to the data high. Obviously, you know, we got way more than 2 to 1 because my trade had a very tight stop like this. So riding it up to where we took profit, which I think was somewhere around here. It's like a 3.5 to 1 trade, right? So I'm okay booking it before this gets taken. Eventually this will get taken, but is it worth it for me to sit through drawdown and then back up for an extra 15 or 20 points? No, it's not. So I was more than content to take it. Hopefully that explains the trade. Hopefully that explains the trade. Also, if you took the trade, put a W in the chat. Let's see who took the trade. Nice. Good job, guys. The education is more important than the trade. I promise you that. Hell yeah. And the market isn't even open yet. Fire, guys. And if you took the trade, hit that thumbs up. Even if you didn't take the trade, if you got something out of the explanation. Exited early, made 20 with QQQ. How could you make 20 with QQQ? The options market isn't even open. Unless you just bought the stock or something, which is crazy. You should switch over to futures. All right. Let's take a look at some stocks here, see how they're reacting pre-market, and then we'll jump into another trade. I still think that even though I longed it, I still think these equal lows on ES down here at around 55.34. I still think that is on the cards today to sweep these lows. Can you explain size lots? Yeah, I'll explain that in a minute. Let me just go over some stocks here. Oh wow. So Tesla is flat from where it was yesterday. Google's flat as well. Nvidia up slightly, but a little less than $1. Apple continues to go down. Like I said, I sent out a buy alert in the Discord yesterday for my next buy level on Apple, but I think it's going a lot more down. AMD flat, Amazon flat, Microsoft flat, Meta is flat. curious about some high beta stocks. Palantir is flat. The reason I check high beta stocks is because I want to see what the risk on appetite is. SoFi flat. Yeah, everything's flat right now. I mean, it's not a surprise. The indices are flat, right? Minus 0.27 for NQ, minus 0.13 for ES. Yeah, Intel, I mean, it's still trading in this 20s range, but they just hired a new CEO, which is great because their old CEO has to go down in history. I think what's his name? Pat Gelsinger. I was going to say Brad Garlinghouse, but that's the XRP guy. Pat Gelsinger. He has to go down in history as one of the worst CEOs of all time. I know a lot of people that worked at Intel, and they went from having 90% of the chips market share to barely anything. They were late on the mobile phone game. They were late on the GPUs. They were late on everything, literally everything. Even Apple said, we're not using Intel chips anymore. We'd rather create our own. So they dropped the ball on every single sector in the chip industry. Literally the worst CEO that I've seen in a very long time. And he was there for a while. Anyway, so they hired a new CEO who I don't know much about, but I will do some research into. Because it could be. We've seen turnaround stories, right? Like when Steve Jobs came back to Apple, he turned that ship around. Apple was almost bankrupt in 1998, and he turned that ship around. I think his name is Lip Bhutan. Yeah. So, I don't know. We'll see. Nice afro. Bro, my hair is naturally curly, and I didn't feel like coiffing it up for you today. Qubits down. Imagine being offered so many great opportunities on stocks and you wanting to buy qubits. This is why retail will never win, man. Like when they're given opportunities to finally fix their portfolios, they still look at buying shit. And I'm not picking on you. It's just, I'm always honest as to what are the retail dummy ills, mistakes that keep people poor. And I want to make sure that you get your head out of your ass and do the right thing. Like, imagine being able to buy Google at a 19 forward PE or 18 forward PE and being like, yep, I wonder why Qubits is down. I'm going to buy more. Yeah, if you're just trading it, bro. If you're just trading it, I agree with you. Yes, you want to look at everything. I mean, if fucking toilet paper futures offer good opportunity, yes, trading it is fine. I'm talking about buying and holding these companies in your portfolio in large amounts when you have so many good opportunities now. Silver might offer an opportunity for long. Yeah, you're right about Gelsinger since 21. Who was I thinking about? Who was the guy before Brian Krasinich? Was it Paul Ottolini? Whoever was around during the time when the smartphone boom happened. But you're right about Gelsinger's tenure was short. He still was horrible. The market opens in 3 minutes, guys. We already made a bag load. Ark, appreciate your donation to St. Jude's. Thank you so much, man. There were some that I missed as well before. Let me see if I can get them. Let me see if I can get them. Soner, appreciate your donation to St. Jude's. Dr. Jennifer Berry, always appreciate it. Wow, she donated $100. Thank you so much, Dr. Jennifer Berry. Appreciate it so much. Are you shorting? I longed. Please explain PPI inflation. No, you can easily Google this. Oh, okay. Size lots when trading futures. Yes. So I want you to bookmark this page here because it will, if you're starting out trading futures, this will help you. And then the market opens. Is there a way to donate from Singapore? Yeah, people from Singapore donate all the time. Naranth, not a surprise that you were spamming. So this page right here, and then we'll get to the markets because it opens in 1 minute. But this will show you all of the futures products and what their multiplier is, right? So what I'm currently trading are minis. So there's mini S&P, mini NASDAQ, ES, and NQ, right? Each point of S&P, of ES, is worth $50. Each point of NQ is worth $20. There are micro versions if you don't want that type of volatility, which are a tenth of the minis. So the micro NASDAQ, instead of $20, each point is $2. And for the micro S&P, instead of each point being $50, it's $5. So bookmark that page that I sent you. Go over this, do some studying, but that essentially is how tick sizes and contracts work. You don't need more than one mini. If you're just starting out, that's actually even too much. You're better off trading micros. I think we can get down there to those equal lows on ES I talked about. Should I subscribe in Discord channel or WAP? There's only one way to subscribe. It's through WAP. And then you get Discord access. So you subscribe through WAP, and then all of the chat, the live streaming links, the analysis, what I'm looking at in terms of stock buys, all of that stuff is posted on the Discord. Okay, market just opened. I want to see if we surpass that 830 low. We did not even take that data high. Wow, what an exit. I still think that those equal lows on ES are on the cards for today down here. I just don't know if we take data highs. Or sorry, above data highs. If we take the pre-market high first, there is also Asia high up here. So no need to rush trades here. We've already made. We actually, in all honesty, I'm on here just to entertain and to be a guide and to answer your questions. But honestly, on a day like that where you make that much money before pre-market, you should just lock it up and go enjoy your day, which after this is what I plan to do. But I'm just sticking around for you guys, which means más café, por favor. 1 second. should actually look up the ingredients, all the ingredients of that salad. I was gonna say, your screen looks just like mine. All right. Adobe. Zello Beat says, call him Mr. Hindsight. Who? Me? If you're talking about me, that's crazy work, bro. I trade live. How the fuck is that hindsight? ES did not take data highs, bro. Are you blind or something? Look at this. That's data highs, fool. ES did not take it. If PPI came in soft, why would the markets be dropping? One, the market is flat, so no need to be an exaggerative little pansy about it. Two, data doesn't matter. It doesn't matter if the data is good or bad. The market is only there to grab liquidity on an intraday basis. It was just a quest bar. VIX breaking out literally says 0%. Breaking out what? Man, some of y'all are hyperbolic, dude. The market just opened 6 minutes ago. This is the effect, right? Is people look at every candle and they try to interpret every candle, which is one of the worst ways to look at the market. You want to get a high time frame bias of what's going on. Looking at every candle, it's tanking, it's rallying, it's tanking. This dude said VIX is breaking out, and VIX is literally flat. Are you still interested in HIMS? For the long term, yes. Adobe, so you see just one candle drop like this and you think this is what I want to buy. It's definitely something that, you know, is worth looking at after seeing this, but for sure it's not worth buying this. Buying a falling knife is not going to result, is not going to end well for you. Let's see how expensive Adobe is. Would you buy Tesla Leaps? Yeah, bro. After an 8% day yesterday, today's the day I'm going to buy Leaps. If you're going to buy Leaps, you should do it when price hasn't rallied yet at major support levels, when nobody else is looking at calls. Why would you buy Leaps on the most expensive day in the last 2 months? Again, this is the type of retail stuff that I talk about that is what is killing your portfolio. Hold on. Let me look at Adobe real quick. What is their valuation? Still kind of expensive. Was their guidance horrible? Is that why they dropped? What was their guidance on earnings? Weak forecast. Weak revenue forecast. That's what it was. I think that, you know, it's still kind of expensive at 36 PE right now. Price to sales still expensive at 9. Price to book is at almost 14. I think it's a good company if you look at its growth and profitability. Right? If we take a look at its profitability, you can see its gross profit in the last 10 years going up progressively. 4, 5, 6, 8, 9, 11, 13, 15, 17, 19. It's definitely has the right trajectory. What about its cash position? This looks great, honestly. 1.5, 2, 3, 4, 5, 7, 8, all the way up to 9 billion cash from operations. So growing in cash, growing in gross profit, growing in revenues. I just think that if you know, in this environment, obviously a lot is priced to perfection. So any weak guidance, you're going to see a drop in order to adjust the valuation to the current environment. So while I do think that looking at it, it is a decent company to own for sure. It's the question then becomes at what price, and that's what you're going to have to figure out with your valuations. Plus, the stock is trading below. Trending down, right? Trading below all of the moving averages. If you can get the stock below 300 or in the low 300s, which I think is very possible, it might be worth it. But here's the weekly chart. This is not something that you want to stick your hand in right now. Obviously, up to you. Try to cancel subscription with them. It's a nightmare. Yeah, unfortunately, that's an anecdote that has nothing to do with stock price, but sure. Should I still keep holding? I'm not your portfolio manager. Imagine taking trades without any plan whatsoever. All right. Wait, what was it? Was this a 15-minute? Wow, gold bounced right off the hourly fair value gap. What time was this? Very nice bounce on gold. I want to see if we can take an ES short down to equal lows. The equal lows I was talking about. The only thing is you can see how much support is being shown here because of how many times we bounced off 830 and just wicked up. But eventually, if we get below this, and retest it, I think we go down to not only London, but the equal lows that I drew out down here. Down there. But we need to close below this and retest it, in my opinion. And then I'll consider taking a short on ES. NQ doesn't have those equal lows, so I would much rather short ES, the one with the actual draw on liquidity, even though NQ will drop too. But for me, that right there is where I think ES is going to. All right. So we also have bearish SMT, right? Bearish divergence. Remember I said at the lows is where the bullish divergence is formed. You see the highs here. NQ made a higher high. ES made a lower high. That's bearish divergence. But right now, yeah, this is a nightmare to trade because right now we just made bullish divergence down here where NQ made a lower low and ES made a higher low. Very hard to short this. You can take a crack here. I only want to take A plus since I want to protect the large amount of money we made pre-market. You can take a crack here. But with that bullish divergence, I would hold off. I still think we get down there. Let me check YM and RTY. Maybe there's a better setup there. We have another macro coming up in 3 minutes. I wanted to listen to the talk on Treasury yield. 1 second.
435. Be right back.
What? This is what I was telling you guys yesterday. You definitely want to hedge on days like yesterday. So what we ended up doing is we sold calls against our shares. But this is the alert I put out yesterday because NVIDIA was up 7% and Google was up 8%. But I was saying yesterday that you want to sell the 300 call on Tesla, which now that call is up a lot today because Tesla went from a plus 8% day to a minus 4% day. Whereas a lot of people YOLO'd into Tesla yesterday because they're, reactionary and they saw, oh man, this is the breakout. So the market dumped into Tesla yesterday, dragged everybody in. And I was saying that's the time that you want to hedge your shares by either buying puts or selling calls. I would much rather sell calls, but not everybody has 100 shares. Same thing with NVIDIA, although NVIDIA does look more bullish than Tesla, to be honest. I think Tesla, like I said, will likely bottom out April, May, not right now. If you guys watched my last video, I was saying once Meta fills that gap, you could take a short buying puts on Meta because I think Meta is going to the 200-day moving average. It's the only stock in the Mag 7 that hasn't hit the 200-day. I think Apple too, right? Oh, no. Apple hasn't hit the 300 yet. So right now in the cards, let me see. 300, 670. So we're up 30% on those Tesla covered calls. Which is a nice little insurance package for us. Nvidia does look more bullish than Tesla. I might consider longing Nvidia, buying at the money calls if we get to that point. I think Nvidia might have a rally back to the 200-day. Man. ES is going to get there. That yellow line down there. That short that I told you could take would be working out real nice right now. It wasn't A+, but if you didn't get in the earlier trades that we had on NQ, that would be the trade. It's going to at least London low, that's for sure. But I think my ultimate target is that yellow line. So mark that out today when I get off the stream. What is the end game of Trump? I told you, just watch my videos on it. Obviously attacking the yields. Oh, Bessent is talking today? I didn't know that. I definitely want to hear from the Treasury Secretary because he's the one that's driving this Trump policy of attacking yields. So, yeah. I definitely want to hear that. So we'll tune into that, guys. We'll get a little more clarity on if there's an updated policy or not. Endgame of America is making Endgame of Trump is making America a profitable business. That may be the goal, but unfortunately, a lot of people are going to get hurt in the process for sure. But that is the nature of America, honestly. These boom bust cycles, right? If you want hyper growth, that has to come with a bust cycle, unfortunately. This is something that is the most prevalent here because we are hyper focused on growth by any means necessary. And at least in recent terms, that means printing money. So when you print money, make credit easy. Yes, it does stimulate the economy, but unfortunately creates these environments where things get so hot that it has to bust every few years. In this case, they're trying to force a recession. There goes London low almost here. Maybe the bust can be exported overseas. No, it will. But that's not the. You can't export the bust and keep things here internally intact. It's just a consequence. If the U.S. economy goes down, the world economy goes down disproportionately. Okay, London low was taken. NASDAQ dumping. You must have just joined the stream, bro. I think ES gets here. Data high is still up there? Yeah, so what? For now, the draw on liquidity are these equal lows that I pointed out in the beginning of the stream. It would have been more optimal for data highs to get taken out. But once you see this divergence here, near data high, the market can go without it. It will eventually take that data high. Is it going to happen today? Or are we going to get a turnaround Friday? I don't know. Huang Li, appreciate your donation. Thank you so much. Hopefully I pronounced your name correctly. Is there any connection TLT versus SPY? The thing is, the thing that annoys me about TLT questions is people don't understand what bonds and bond funds are, right? So people look at TLT and they think it's a meme stock because it's something that can be traded. Just think of TLT as a treasury, okay? So you're buying treasuries, but with an ETF as opposed to buying it from the government. So the first reason that you're buying bonds are for the secure dividend payout, which TLT pays a dividend. If you bought a treasury, it would pay a coupon. Same thing, okay? So you're buying it for that, as opposed to keeping your money in cash. You're not buying it because you think that it somehow has to perform like Tesla. So the fact that people keep pouring into TLT without even understanding what they're doing or why is wild to me. You're better off just keeping your money in a high yield savings account. So you're buying this for the guaranteed 4 to 5%, and the possibility that when yields go down, you're going to get an appreciation in price while locking up that 4 to 5%. But if you're just buying it just to see it move like Tesla or Palantir, you're doing it extremely wrong. This is just a place to park your cash so that you don't get tore up by a bear market. Let's hear Besant real quick. TLT leaps. Oh my God. After I just got done saying that, bro, if you buy TLT leaps, you forego the coupon. You're not getting paid the dividend. You're just sitting in options. And if you're going to buy options, there are many better things to buy options on.
For the American people, I think having been in the markets for 35 can we
concerned now that these losses are picking up?
Well, look, Sarah, what we're focused on is we're focused on the real economy. Can we create an environment where there are long-term gains in the market and long-term gains for the American people? I think, having been in the markets for 35 years, I know the market is prone to big unwinds like this. I think we've seen, a lot of position unwinding, and I can't really speak to that.
I guess, and this has been consistent with your view, but 62% of Americans own stocks. I mean, it's near 20-year high. So how can the White House not be concerned about hardworking Americans' 401k plans?
Look, Sarah, I didn't say we're not concerned. I'm not concerned about a little bit of volatility over 3 weeks, because if you look over the long term, the reason stocks are a safe and great investment is because you're looking over the long term. If you start looking at micro horizons, stocks become very risky. So we are focused over the medium long term, and I can't tell you that the market is going to go up today, tomorrow, next week, but I can tell you that if we put proper policies in place, it's going to lay the groundwork for both real income gains and job gains and continued asset gains.
Understood that you're focused on the long term, and part of it is these tariffs, but now there's concerns about a possible government shutdown. Senate Minority Leader Chuck Schumer saying the Democrats are going to reject a government funding bill. We have this deadline tomorrow night. What is your expectation, Mr. Secretary, and how destructive would this be?
Well, it'd be incredibly disruptive. And look, Sarah, I know you said you've been in Singapore all week, but I think the underreported story of since January 20th and of the past few weeks is this incredible Republican unity and this Democratic disarray. Is that we've seen Speaker Johnson get through with President Trump's help a tax bill, get it over the Senate. We saw a clean CR bill. And if Senator Schumer wants to reject it, hurt the American people, close down the government, and they're going to own any of the problems that go with it, including economic slowdown. And if this is all they got, then they ought to regather and think about what they're doing to the American people and the economy.
You do think that a shutdown would cause economic harm?
It can't be good.
Yeah, I mean, look, the market's been really focused on tariffs, Mr. Secretary, and it's been another sort of up and down ride this week. A lot of uncertainty among business leaders. This morning, President Trump threatened a 200% tariff on Europe on wines, champagnes, and alcoholic products coming out of France and other EU countries. And I do wonder how that comes to be. Was this premeditated? Did you know about this? This is in retaliation to what Europe did, in retaliation to the steel and aluminum tariffs, but 200%?
Look, I was with the Business Roundtable yesterday. I think it was 135 CEOs, and I talked to them about our plan, which includes tariffs, deregulation, and what I call reprivatizing the government, and bringing down this incredible level of government spending. And one or two items with one trading block, I'm not sure why that's a big deal for the markets.
I think that the big deal for the market is just the not knowing what's next and what the target is necessarily going to be, and also not knowing where this stops. Because if we ratchet up tariffs, they retaliate, we go higher, then what?
Well, look, sir, it could go the other way too. Look, that's the nature of these reciprocal tariffs. That all President Trump is asking is for countries to take theirs off. So we have identified some strategic industries, the steel, aluminum, likely autos, but everything else is up for grabs, and that's going to be a decision that's made by our trading partners.
Yeah, that was one of my questions, which is how these tariffs come off, if that is ultimately the goal, because it feels like once they go on, it just gets out of control from there.
Well, again, that's a decision by our trading partners if they want to ratchet things up. And I could tell you, as somebody who's studied the history of this, it is the surplus country that takes the greatest hit. We have a big trade deficit with these countries. So in the event that there's a back and forth with tariffs, I would counsel these government leaders that they are on the losing side of this argument economically.
You mentioned the Business Roundtable that you attended yesterday. What did you hear from CEOs on this issue? How much frustration or nervousness is there?
Look, I think that we were always going to have a transition from this incredible, unsustainable level of government spending that we had. I think last week I called it a detox. And generally, they're very supportive of that. And we're going to have a transition. We're going to de-lever the government and re-lever the private sector, both through the regulated banking system and through industrial deregulation. They were very excited about that. And the one thing in terms of certainty that everyone was the main topic is the tax bill. And we're working on that every day. I had a meeting with the Senate House leadership and Kevin Hassett from the White House yesterday. So that's moving forward nicely. And I'm confident that that's on track. We're not going to have the biggest tax hike in history on Jan 1. We're shooting to get this done this summer, and I think that's going to provide a lot of certainty for American households and for industry.
I definitely want to get to that in your meeting and where that's going on Capitol Hill with the tax cuts. But just while we're on trade and the response from corporate America, when you say that when we're in a period of detox, you used that word on CNBC last week, is that a euphemism for recession?
Not at all. It doesn't have to be, because it'll depend on how quickly the baton gets handed off. Our goal is to have a smooth transition. But I tell you, Sarah, the easy thing for us to have done would have been to come in and just keep this massive spending level going. And it's unsustainable, but could we have kept it going for a year, 2 years, maybe even 4? Maybe, but you're risking a financial calamity. So, we are trying to get this tax bill done. We are controlling expenses. And when we get the tax bill done, so if you can change the trajectory up revenues, up economic growth, hold expenses flat, or do the unthinkable and cut expenses, then that's a pretty good trajectory on growth. And if we go back to the model in the 90s, that's exactly what happened. We'd see interest rates come down, we'd see the private sector take up the slack from the government. Because right now we have excess employment in the government, and those people can be moved to the private sector.
Yeah, I mean, the question is what's realistic when it comes to cutting the debt. I mean, I think you yourself have said you want to get to a 3% deficit to GDP. We're, almost 6.5% last fiscal year. Doge is working on it. $115 billion in Doge savings so far, though, so that's not going to make a dent. Where do you see the meaningful cuts coming from when you talk about rebalancing away from the government? Well, look, I don't know what your family budget is like, but to me, $115 billion is a lot of money. That's 5% of the deficit last year. So I think that's a pretty good start, and it's only been 6 or 8 weeks. So there's probably a lot more that we can do. And there's two parts to this. It's accelerating the economy, growing the revenue base, and controlling expenses. The U.S., we do not have a revenue problem. We have a spending problem. The government revenues are right at the long-term baseline that the previous administration just blew things out to the upside, and we're trying to get this under control. What about the economic signals that you're seeing right now? We saw this surge in small business optimism after the election because of some of the policies you're talking about. And then for the second month in a row now, we've seen a drop. Also, the Atlanta Fed, for instance, is forecasting a negative growth rate for the first quarter. I could go on about some of the confidence warnings right now, but I am curious if you're concerned about what
They're trying to soften the language around recession, which obviously is smart, but
revised up their number.
Looking at a potential multi-day NVIDIA long here.
Gold imports, which was kind of an anomaly. So, I'm not worried about a very noisy indicator. And again, as I told the Business Roundtable yesterday, as I tell your viewers, what we're trying to do is create economic certainty. We're going to do it with the tax plan. We're going to do it with deregulation. And I also said to the Business Round, I think it was 135 CEOs yesterday, if you came out with a plan similar to what Doge wants to do with the federal government, all your stocks would go up 15 or 20%. It would be considered a miraculous restructuring, cost savings, and put you on a sustainable course. So I think we're not getting credit for this yet. I think we will. So.
Yeah, I mean, and part of what you want to do is lower interest rates, which you've said, and that should happen if the government cuts spending. I do wonder. We've seen a drop in rates, as you've said, from near 5% on the 10-year, we're down to 4.3. But it's happening for the wrong reasons, right? It's happening because of economic slowdown concerns, and it's moving in the opposite direction as stocks. So, do you want to see rates fall, even if that's why it's happening?
Well,
these are good questions.
Let's disaggregate, Sarah, why rates are going down. We had a surprise CPI yesterday on the downside. We had a flat PPI. So maybe the inflation is getting under control, and the market's going to have some confidence in that. There are a lot of reasons that rates can come down.
I wonder also what you make of the U.S. dollar. I mean, this is right in your territory as hedge fund manager, I know, and also Treasury Secretary. U.S. dollar's been weakening as well, which wasn't necessarily what was supposed to happen with the tariffs, and whether that speaks to anything about foreign demand for our assets in the U.S. right now.
Well, Sarah, I don't have to tell you or anyone on the show, markets live in the future, and the U.S. dollar priced in a lot after President Trump's victory and the Republican sweep. So, a lot was priced in that it's natural to see an adjustment, and I think the markets adopted a wait and see attitude. And the other good news for global consumption is that for the first time in 25 years, the Germans are going to take off their debt brake. This is something that the French leadership had tried to do. The Italian.
All right, so basically he's saying that a detox doesn't have to mean a recession, and that a government shutdown would somehow be good, which they always say that every time the government faces a shutdown. So I'm not taking that language seriously, but trying to soften the language around, the market needing to be in pain in order for the economy to get better. I think there's a long on NVIDIA multi-day that I'm going to send out in the trading and investing Discord for later today. But we did finally break structure on the 4-hour on NVIDIA. And we are, hopefully we get a retrace into this 4-hour fair value gap. But I think that NVIDIA finally looks like a long here for the multi-day, with a potential target of 125. So we'll likely take that long today, and we'll send it out for sure. In terms of the indices, We are coming off of London low, and this will likely give us a take of data highs. We will likely take out data highs after this. Long call or put. If I think Nvidia's price is going to go up and you don't know if I'm talking about a call or a put, that's crazy, bro. You should probably be paper trading. How it broke structure? Yeah, it broke above the last higher high. Or sorry, lower high. Low, high, lower low, lower high, lower low, lower high, lower low, lower high, and then we finally broke above it. What strike covered call for Friday? Not talking about a cover call, not talking about Friday. Yeah, I think Nvidia is along here for sure. Thoughts on Meta right now? Thoughts? Some say we get a nice bounce until June. I think it's not going to be as straightforward. That's what I'll say. People like to think of things in terms of, oh, we're going to get a nice rally and then a drop. And I think things can just be very ugly. But I think third week, fourth week of March, I think we will get a few more rally days for sure. Would you consider futures to be more successful to trade? They're more accurate. Whether you're a successful trader or not has nothing to do with what you trade. Has to do with how long have you been trading, and are you seriously honing your craft, or are you just waking up and trying shit? Yeah, I think I'll be longing Nvidia later today for sure. Don't short? Nobody said short Nvidia. What are you short Tesla? What are you talking about? Are you invested in Hood? Not yet. All right, guys. We banked a whole lot pre-market, made an entire bag on NQ. Was a fire trade. Rewind the tape if you want. Right now, I'm looking at longs on NVIDIA multi-day. We'll send that out later on in the Discord as to exactly what strike price and expiration I'm taking. But I think for sure I'm taking that long, that multi-day long. NVIDIA looks like the best setup at the moment out of all the stocks. Surprisingly, AMD too. For a short-term long. But NVIDIA here looks really nice. Surprisingly, the VIX is not down that much yet. It's still hovering in that 24 range. And tomorrow we have consumer sentiment at 10 a.m. But hopefully we get a couple more days at least of rallying here. What do you think of Intel? Any thoughts on Apple? Thoughts all around, guys. Ask me a more specific question, man. I'm not going to just start giving you random thoughts on something. What's a TP on NVIDIA? I'll send out my thesis in the Discord when I take the trade. But this is a fire long setup here. Thoughts on the draw that didn't happen on ES? I mean, a draw happened. The main draw didn't happen yet. So London low obviously was taken on both indices, right? That is a draw on liquidity. You can see it here at London low. I still think that ES getting to these, whether it happens today or tomorrow, I think this is still a draw as well, for sure. But London low is an interim draw, which is why I'm going to wait until end of day before taking NVIDIA, because I want to see how this shapes out. Bobby says, AMD, who are you and what did you do to Z? No, I'm serious. AMD looks like a nice long here. Look at that. It's not as nice as NVIDIA because NVIDIA has a clean break of structure, but for sure. Would you consider entering NVDL instead? No. And NVIDIA is way more liquid. So why would I trade something that has much less liquidity? Thoughts on thoughts. I think Meta eventually gets to the 200 day. Especially if you close below this. I think Meta gets to the 200 day. So I'm not touching it yet. Plus you have this head and shoulders here. I wouldn't be surprised if it gets to at least 570. Yeah, this is such a nice setup on NVIDIA. Today's drop was a manipulation? No shit, bro. That's how the market works. And that's how it worked yesterday. Okay, no shit, girl. Same shit. I think. All right, so we're finally going to take data high. Finally, on NQ. Did NQ take it? Oh, not yet. Wow, ES stopped just short of taking it. Right? Hold on. The high was 56.04. 56.0375. We didn't quite take it yet. That is so crazy. I have sold all my stocks and have ready to buy stocks. Which one should I buy? Bro, this is not a candy shop. Brad Harris, appreciate your donation. Thank you, man. You should live trade again tomorrow on YouTube? No. There's only so much of the mental institution I can take. If you want to watch me trade live, just like this, but in a much smaller controlled environment, come to the Discord. I trade live every day, and it's a lot less chaotic than this. Are you the guy from Ancient Aliens? Oh, you mean the alien that probed your mom? Yes, that's me. Juan, appreciate your donation, bro. Juan always donates. Thank you so much. Thank you, Juan. What time is it? Okay, let me see something. We might get our entry on NVIDIA here, depending if... I wonder if a short sets up again. This is a wild day. Higher high on NQ. I mean on ES, lower high on NQ. I wonder if a short sets up here. I think this is a short, guys. You said if you made your money pre-market, better go for a walk. Yeah, but I'm trying to give you guys as much as possible before I let go, before I leave. ES is way too strong for me to short NQ here. It does look like a typical short setup. And there's a 15-minute fair value gap here. There's 8:30 and midnight right there. ES created a bullish fair value gap though. It might bounce off midnight here. All right, not worth it for me. I'll send out the NVIDIA trade if I take it later. It's really like how this setup looks. I think it can drop down later today, but if it drops down to my entry, which is in this 4-hour fair value gap, this unicorn here, then I'll take it long for tomorrow and for next week. Otherwise, we just took pre-market high on NVIDIA, and this looks more like a short setup here. So intraday looks like a short, high time frame definitely looks like a long. So we'll wait to see it drop back down to my entry, and then we'll likely take it. If you're a trend line trader, by the way, which no shade, if you're profitable and you're a trend line trader, you can see that this is a broken trend here too. On NVIDIA. I need to add this model to my repertoire. Romeezy, what's going on, man? Jasmine, I got in long off that trend. Oh, on NVIDIA? Hell yeah, good job. Random question, do you do any type of collecting, like baseball cards? Bro, how old do I look? Yeah, I used to collect basketball cards when I was 11. I still have them. I have a Shaq rookie card, which is wild. I also have a Kobe rookie card, but yeah, I mean, not as an adult. Meta going down to 200 MA? Yeah, I think so. Yuma, cheers from Finland. Appreciate you, man. Welcome aboard. All right, guys. I'll see you guys in the Discord for those of you that are in there. Obviously, for those that aren't, we live trade every single day at market open. Congrats to you guys that took that fire-ass NQ long earlier in the day. We got our bag pre-market. We'll send out the NVIDIA long. I do think that is on the cards. I do think that if it looks like we're going to close below 605-ish on Meta, I do think Meta goes down to the 200 day. So there could be a short opportunity there. I do think Apple eventually keeps going down. This ugly ass head and shoulders here that you can see on the daily and weekly. I think Apple does go down. Hopefully we can catch Apple below $200 for the long-term port. Good job on hedging with Tesla. Those covered calls are up a lot. I don't think this is the bottom for Tesla, unfortunately. And yeah. That is it, guys. Hopefully you guys enjoyed this. Hopefully some of you made money. I'll catch you guys. Have a great day. And I'll see you guys in a bit. Peace.